Hey everyone, and welcome back to the channel. Today we are going to talk about why Elon Musk might not actually be able to buy Twitter. Let's get right into it. Since Elon Musk announced his plans to buy Twitter, several issues have arisen, including how the free speech advocate would handle content moderation, the economic model, user experience, and of course whether he would allow Donald Trump to return to the network. It certainly appears so. Before we get ahead of ourselves, there's another important question to consider. Will he be able to purchase Twitter at all? As Musk continues to raise funds to complete his $44 billion buyout of Twitter, market volatility could force the world's biggest chevalier to renegotiate the transaction. Last month, the board of directors of Twitter decided to sell the firm to Musk altogether for $54.2 per share in exchange for Musk selling $8.5 billion worth of Tesla stock. He also acquired a pledge for $12.5 billion in margin loans secured against his Tesla stock from Morgan Stanley and other financial institutions, which he has since reduced to $6.25 billion after securing about $7 billion in equity from a group of new co-investors. Tesla's stock has dropped more than 25% since the sale was announced, as investors fear Musk will sell even more of his shares in the company. Twitter stock has also suffered a setback, falling to $44.05 on Thursday afternoon after a 4-day losing streak. Given that Musk's bid is now $9 billion higher than Twitter's current market value of $35 billion, investors might acquire Twitter shares at its present low price in the hopes of receiving a $54.2 per share check at the end of the takeover tunnel. However, it appears that the market does not expect the $44 billion acquisition will go through. Twitter was trading at $45.08 a share when markets closed on May 12th, its lowest day-end price since the company's board agreed to sell the site to Musk last month. The stock had hit a low of $43.33 earlier in the day. According to Christopher Rupke, chief economist at FWD Bonds, the falling share prices of Tesla and Twitter, along with the continuous decline in the tech industry, Musk's original Twitter offer price could be a bridge too far. Rupke said in an interview with Vanity Fair, the price that was agreed upon occurred before the market collapsed in recent days. He then said, "It's a bit of a perfect storm, what he's getting hit with right now. The next shoe to drop would be something that suggests the deal is looking a little more shaky, and whether or not the financing can still be kept in line." Musk, who is apparently still looking for co-investors, could try to renegotiate his original offer price or leave Twitter entirely. However, if Twitter rejects his renegotiation efforts, Musk will be liable for a $1 billion breakup fee. Musk's disturbingly anarchic attitude, according to Roger Kay, founder and president of Endpoint Technologies Associates, has contributed to market skepticism about the deal's sustainability. He explained in the interview, "You really don't know what to expect from him." He then said, "I wouldn't be that surprised if he suddenly reconfigures his offer and lowballs it. He'll just say, well, it's not worth as much as I said." Kay then added, "There are ways to invoke clauses that would cause the deal to fall apart if Musk doesn't really want to do it." Kay ended by saying, "That's what the street is looking at. They're thinking it may not be that great a deal after all." Hindenburg Research, a firm that has a short position on Twitter's stock, published a report on May 9th stating that there is a significant risk that the deal gets repriced lower. While Hindenburg expressed support for Musk's efforts to take the company private and expressed confidence that Musk could get it done, it also stated that Musk had no motive to follow through on his initial offer. The report went on to question how Musk would finance the buyout, writing that placing both Twitter and ultimately Tesla's future on a foundation of further equity-backed margin loans, or potentially more sales of Tesla's equity amidst a volatile market, adds risk to both enterprises. However, Rupke, who pointed out that you can never completely rule out Musk, feels Twitter's stock hasn't fallen far enough yet to indicate that Wall Street is thumbs down on this and believes that the deal is not going to go through. As for Musk, he responded to the Hindenburg report by shrugging it off with a line from Monty Python, tweeting, "Interesting, don't forget to look on the bright side of life sometimes." Just weeks ago, Musk disclosed that he had secured $7.14 billion in funding for the deal. His group of co-investors now includes Oracle co-founder and Trump supporter Larry Ellison, an investment house run by the Sovereign Wealth Fund of Qatar, Sequoia Capital, Andreessen Horowitz, the crypto exchange platform Binance, and 13 others. According to the petition, if and when Musk takes over, Prince Alawid bin Talal will keep his 35 million shares of Twitter. According to a Bloomberg news story, after his May 4th announcement, Musk has raised another $1 billion in equity. Kay claimed that he has never seen almost anybody in the corporate world pull anything like this when it comes to Musk's last-minute move to bring in equity partners. That's it for today. If you guys enjoyed the video, make sure to hit that like button. Don't forget to subscribe and turn on that notification bell so you never miss out on any future content we'll produce for you guys. We're signing off now, but we'll be sure to catch you all in the next one.